I got Jenny Horn with me here in studio. Jenny, I think you had the best assessment of where Nvidia stock would be today, because your point yesterday was basically to fade the market maker move, which was like 11% as of the close. So we're way within that. Anyone who faded vol on Nvidia is getting paid this morning.
But this still, if we opened where we are trading right now, even pre-market, this would be its worst post-earnings move in nearly 2.5 years. So that is something to consider, that even though, I think this is an overreaction, frankly. I think that this is what happens when you put the entire fate of the stock market in one company. And I was actually listening to this analyst call last night that was like, there's no sports on right now. We're like pre-NFL, like the real season here. So Nvidia's earnings were like the sporting event of the week. So there was like an extra focus on a stock that's already garnered extra attention. I think that there's a lot to like about this report. I think the reaction isn't indicative of like how strong the fundamental story is. We did see second quarter earnings and revenue that were better than expected. Forecasts, though, for their third quarter did not exceed consensus. So again, it's like you could put out the strongest report, as Nvidia did. There's continuous growth, but any which pace of growth that's slowing, I think, is read as negative. But we have to expect this. We're not always going to see like triple-digit percentage growth on a year-over-year basis. And I was reading again one note that was like, well, there is some degree of growth rate slowing on gross margins, data center sales sequentially compared to their first quarter. And that is like really nitpicking. If we're saying quarter over quarter, sure, we're seeing some degree of declining growth. Again, I think that's reading too much into it. I think that we got some of the fears around Blackwell ease, because basically they do expect Blackwell to be in volume production in the third quarter. Hopper demand does remain strong, and I think the story still stands that right now demand is so far outpacing supply that this is a good place to be in for Nvidia. I think that this, again, does not say anything about the AI trade or like the future of data center growth and all these companies pouring their investments into Nvidia. None of this changes. I think it's a bit of an overreaction.
Yeah.
Here we have the current stock market update for Nvidia Corporation, stock ticker NVDA. Before we begin with this chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders will be able to find this information more easily on the platform. So here we have the 4-hour price chart. Each candle on this price chart is a 4-hour trading period. And as we can see here, we're starting to get a bit of a lift off the near-term lows, which came in at $100.95. There are some significant questions currently with this stock about whether or not these recent price moves to the downside have been excessive, or whether or not they should have possibly been expected in advance. Was this stock overvalued? Is this a market overreaction? Is this price movement to the downside irrational? Or are we likely ready to start to see a significant movement here to the top side now that investors have had some opportunity to allow the dust to settle and to allow share prices to start to find some support zones. So in this video, we will be looking at some specific price levels so that traders can hopefully identify some profitable trading strategies for this stock in the days and weeks ahead. So as things currently stand, we have fallen quite sharply from these prior highs, which came in at 131.26. This area essentially marks a triple top resistance zone at this point, and this failure here was quite important because, as we've explained in prior videos, this area was also a 78.6% Fibonacci retracement of the prior declining price move. So the fact that share prices did fail here was a very interesting development, and it was something that could have been seen in advance. This was a price level that we were outlining before the most recent earnings report came to light. So as things currently stand, share prices have seen substantial moves lower. We've seen some very significant downside price movements, complete with bearish price gaps developing in the process. And there are real questions about whether or not investors should be panicking at the moment. This is a very reasonable response. A lot of these price movements don't seem to make a lot of sense in terms of their alignment with the actual earnings figures that have been posted by this company. So it does make sense for investors to be worried at this point or unsure about what the environment currently looks like. So as things currently stand, I'm really looking at support zones coming in first at $100.95, and then roughly $1.50 or so below there due to the fact that the 78.6% Fibonacci retracement of the most recent ascending move higher would come in right around $99.30. So the way that we arrive at this figure would be to look at the prior lows at 90.69, extend this price movement activity to the highs at 131.26, and then from there we can see that the 78.6% fib retracement rests just below the prior price lows, which come in at $195. So essentially, is there a possibility that we could see a bit more movement to the downside? It's possible, but the way the chart is lining up here, potential movements to the downside look to be quite limited at the moment. So, there have been people, especially in the comments, I've been seeing people calling for $50 per share and things like that. I do find those movement that type of price movement to be a very extreme, type of scenario. I mean, I think that you would really need to see a broad sell-off in the rest of the market as well. At the moment, I think this just seems a bit unlikely given the fact that share prices have already seen tremendous moves lower, and there isn't really a near-term catalyst to propel this type of downside activity. In other parts of the market today, we have seen two recent inclusions into the S&P 500. Palantir and Dell Technologies were both added to the S&P 500 today. This was, I think, American Airlines and another lesser-known company was removed from the S&P 500. So that sort of gives you a sense of where things are heading in terms of the importance of the overall technology sector. But these recent developments here have, added some lift to share prices. I did release videos on both of those stocks earlier today. I recommend checking those out because those price charts, especially Palantir, has seen, some price gapping activity, and the sustainability of that move is a bit questionable in my view. So, but this was a positive story, and this has brought some lift to the space. So we have started to see Nvidia share prices start to move higher as we start the week. So, whether or not this activity can maintain itself is a bit, still a bit questionable. If we look at the indicator reading here, we can see that the trend and momentum is still focused on the downside, as we can see here. But at the same time, we're also starting to move out of oversold territory, as we can see here. And then in addition to that, there is a bit of an uptrend that's starting to develop in the indicator reading itself. So overall, there are some dueling signals here at the moment. So this does add some uncertainty here. But if we drill in here, we can see that the relative strength index is on the verge of posting an upside break, an upside crossover relative to its own exponential moving average. So essentially what I'm talking about here, the RSI is the indicator is the purple line, and then the yellow line here is the exponential moving average of the relative strength index. So as we can see here, we're on the verge of making a break in the upward direction. And then in addition to that, you've also got this positive trend wave here and the fact that share prices are now moving out of oversold territory. So the indicator reading is starting to look, near term, is starting to look much more positive. But at the same time, we do have to contend with the fact that this longer term trajectory here is still focused lower. So there are some conflicting signals, and this does largely depend on the time frame that you're watching share price action and possibly the time frame that you're using to trade your positions. So, as things currently stand, the downside here does look limited. I mean, these movements have been very extreme. There's not much really behind these price movements other than sort of generalized assessments that possibly Nvidia was overvalued and things like that. I've also seen people compare in the comments section, compare the current price level with the pre-stock split price level, and make some assumptions and make some determinations based on those price movements. However, these movements to the downside, at some point, we're going to have to start to find a bottom here. So as things currently stand, I really don't see much more movement to the downside. I don't really see a huge amount of reason to panic for this stock. And I also don't see any reason to really take an outright selling position and start to perhaps short sell or even engage in put options for this stock. Are there still arguments out there saying that share prices could move lower? Certainly. If this were to happen, if we were to see a break below 99.30, I would then expect the next downside retest to be focusing on the prior price lows coming in at $90.69. So here's the current stock market update for Nvidia Corporation, stock ticker NVDA. All Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.